Happy New Year. This is Cynthia Fick, and I'm coming to you today from our new office at the 101 in Broadway in Tempe. And I hope you all can come visit us sometime, maybe schedule your next review for in office. So let's start off by talking a little bit about 2024. You may not remember, but in January 2024, there was a lot of negativity about the year in advance, saying that they expected it to be kind of an off year after the great year we'd had in 2023. Well, guess what? It proved them all wrong, and very volatile, but very good year. We came into December and things got a little rocky. The market was extremely volatile. The average stock was down 6%. There was no Santa Claus rally. We had 14 days of negative breath in the market, which is kind of unusual. And so a lot of things were happening that kind of spooked the market going into 2025. So what does that mean for the year ahead? Let me give you a little take on what I think happened at the end of 2024. We had that huge rally off the election, and there's this big fear of missing out. We have $7 trillion on the sideline, people that had not been in the stock market, just waiting to see what was going to happen in the election. They all went rushing in, and then there was a lot of profit taking also. So I think that's a little bit of what was going on at the end of the year. So does that necessarily mean that 2025 is going to be off? No, because there's several things I want to kind of remind you about to let you know why I think this could be another good year. Very volatile year again, but could be another good year. The first thing is, remember when I told you they start lowering interest rates. When the Federal Reserve start lowering interest rates historically, the stock market has done well 3 months, 6 months, 1 year, 2 year down the line, unless we run into recession, which is what I'm watching carefully for. Okay. The second thing is productivity gains. Artificial intelligence, all the new technology has just increased our productivity since 2015. Productivity has quadrupled. In the next couple of years, we're expecting it to probably double again. So we've become a very productive workforce, and companies are, very productive also. So that's one thing. And this is all the health of our economy. The second thing is demographics. We're coming up on a time when a lot of baby boomers are hitting the age where they're going to have to start taking out required minimum distributions, and they're going to spend that money. And so as they spend that money, that's really good for the economy. Follow that by, we have millennials that are hitting their highest earning and spending ages, and so the Gen Zs are right behind them. So demographics is another reason for the long-term health of the economy and the stock market. The last thing is we are still in that secular bull market. And that just means the general trend of the market is up for a very long time. Does not mean that we won't have 20, 30, 35% pullbacks in the market. We had one in 2020 and 2022, but the general trend is up. So that's what the forecast is at this point for 2025. I said this earlier today to a new client, is that we let the market show us what it wants to do. I could sit here and try to guess what's going to happen in the Trump administration. I could try to guess what might happen with tariffs. I could try to guess all these different things, or I could just watch the market and let it show us what it wants to do. It will even predict the economy 6 months out. So let's see what it has to say. So look forward to speaking with you next week as we'll dive deeper into some of these topics, and have a great day. Talk to you next week. Bye-bye.